Hey guys, so today we are doing a 6-step series of your home ownership series of home buying for your first house. So if you are looking and you don't know where to start on buying your first home, you are in the right place. So in this video, we're going to walk you through the steps to home ownership, starting with the very first thing is getting a pre-qualification letter or a pre-approval letter. So why get pre-qualified or pre-approved when you're looking to start looking at homes to possibly buy? These two are very, very different things, and I'll go into detail of why. So the pre-approval and pre-qualification is going to give you more confidence that you can actually afford the houses you've been searching for online, and it also shows the seller that you can afford it. So it's going to strengthen your position if you are interested and do make an offer on the house. So let's break down the difference between the two. A pre-qualification is great, don't get me wrong, but literally it's you calling me on the phone and you're going to answer some very basic questions about your income, your employment, and your debt status. We may even pull a credit report, but we are not verifying anything as far as documenting what you're telling us. So it's more like a verbal pre-approval. We're not looking at everything yet. The pre-approval is very different. It's more in depth, and it's taken a little bit more seriously with sellers in the marketplace because it involves verifying your income, your assets, pulling a credit report, looking at your credit score, looking at your actual liabilities, and providing the documentation that you'll have to send to us to make sure that we're documenting all the stuff you said is correct and that you can qualify to buy that house. The pre-approval is so important. So imagine if you're a seller trying to buy a house and you have two buyers making an offer. One's pre-qualified and the other's pre-approved. The seller's more likely going to choose the pre-approved buyer because their financials have already been verified, and they're going to feel a little bit more confident that they're going to have less issues with getting their home sold in that situation. We're going to look at the 4 C's of lending when we get you pre-approved for it. So let's take a little deeper into that. So the 4 C's are capacity first. That means, are you capable of buying the house and making the mortgage payment? So we're going to look at what we call your debt to income ratio to see what current liabilities you already have versus your income to see if you can afford the monthly payment. The second one is cash. So do you have enough money and down payment for the closing costs set aside already, or if you're getting a gift. Now, keep in mind, there's lots of different loan programs out there that might not require a down payment, but if in fact you do and you might need your closing costs covered, that's fine. But once we get you pre-approved, we're gonna know which loan product that's more likely gonna fit you best. The credit is the 3rd C of credit. We are going to pull a credit report to get your credit score, look at your payment history. It shows the underwriter, the higher the score, the more likely it is you're gonna get better rates and terms, right? I'm not saying you can't get a loan if you have a lower credit score, but you'll definitely pay a higher rate and some fees for that. And then the last thing we look at is your collateral, which is really your appraisal. What we're giving you. So let's say we loan you $400,000. The lender wants to make sure, and the investors, that the house is actually worth what you're paying for it. So in overview, finding a home is so important, but you've got to take the first step in getting pre-approved. So in our next series, we're going to start the exciting process of finding your home and picking a local real estate agent to work with. So join us in our home buying series and reach out if you have any questions, and we hope to see you in our next video.